Yeah.
Okay.
Okay.
Yeah.
All right, good.
Yeah. So please introduce yourself and tell us some of your background.
All right, I'm Glenn Tetley, and I founded Tetley Wealth Group in 2009, but I've been in the financial advising. I'm a certified financial advisor. So I've been in that industry since 1985. At Tetley Wealth Group, we do retirement planning, and basically we kind of talk about it as being your movie, which is why the background you see behind me has a movie projector and all of that. We talk about what scenes you want in your movie and very long term, we're going to be the director and you're the star of your retirement and all that. So that's what we specialize in. So we deal with a lot of individuals and business owners, and we manage their money and talk about retirement planning. So I'm involved in finances, every day. We do not use credit scores to evaluate clients or open their accounts. They don't have to have a good score to open an account with us, but they have to have some money. So, so we're used to the trials and tribulations that credit scores can put people through to get through their financial lives, if you will.
Right. Well, that's really great. It's interesting to know how long you've been in this sector of finance. And so in that way, what can you tell us about how credit scores have affected you or your business or those in your business?
Well, way back when, before I was in this business, I mean, the government for, 50 years has encouraged the population to take on more and more credit. And in fact, they used to give us tax deductions for the interest we paid on credit cards. So when I was growing up, right out of high school and college, everybody wanted to get credit cards and go max them out and buy everything we can. And we got tax breaks for doing it. Of course, interest rates, were all over the map and maxed out in the early 80s, ridiculous, 15 to 20% amounts. But so personally, I didn't have good credit at first. It was hard to establish. And so, every time I handed out my credit card at a restaurant, I was nervous whether it was going to get rejected or not. And, I've come a long way since then. But yeah, it was built around this whole credit score situation, which I think led us to the 2008, credit crisis, and became a disaster for the economy. It became a house of cards. Anybody with a credit score of 700 or higher, could buy a house as long as they were breathing. I called it the spoon test, basically. And I have a real estate background before the securities industry. So even telling my wife, Carolyn, this is not going to last. This cannot go on forever. Too many people were too leveraged out in the markets. Just because they were breathing, they would get a home loan and buy a house. And anyway, that whole thing just collapsed because of so much credit being available out there, which in turn ruined lots of credit scores and became more and more difficult for people after that to reestablish themselves financially, and keep on going. So it's been that way for so long. I can just now see cracks in the system where things are starting to change, like the buy now, pay later movement, with Klarna and Affirm and Afterpay, where they allow you to, even through Amazon, make 4 equal payments without paying any interest. Well, right. you can only do that if you have a good credit score. Affirm's going to check it, and they have interest rates that they charge as high as 25% if you don't have a good score to get into that. So it's a come on that sounds great, but it's not for everybody. And so it's the same kind of end result where the people who have struggled and had trouble with their credit, they're going to end up being gouged and paying high interest rates, no matter what they do on these situations. And they're the ones that can least afford it. So to be honest, I don't know what the answer is, but I think it's a serious problem in the system that we've become so dependent, on credit scores. I mean, I have lots of stories as far as people's finances just destroying their lives for one reason or another. Not having enough money or actually getting too much money in a windfall can destroy your life too if you don't know how to manage it. So it's all about an attitude with money. And I've taught this in many classes over the decades. You have to have the right attitude about money to manage it. You're not overspending. You're not spending more than you're earning. And I used to call it, you have to act your wage, not
Act
your
your
age.
like
you have,
that's
you have to
great.
act your wage. Whatever you're making, that's what you can have as a lifestyle, you know.
Right.
And part of the problem is, as you know, just coming out of the education system, or still being in a higher education system, they don't teach you that stuff in school. You know, we need basic checking
Yep.
account.
If you don't, you miss out. Kind
Yeah,
of a thing.
yeah. I think we need basic personal finance taught in elementary or junior high or somewhere at the very beginning so that
Right.
kids think about money and develop the correct attitude. I think most children adopt whatever attitude their parents have. You know, that's what they learn, is how their parents act towards money. Older generations are very secretive. They don't want to talk about money to their kids. You know, it's a taboo subject. And, you know, I have kids that come in here today and they've inherited from their parents. They have no idea what their parents had. They don't have any idea how to manage it. It's just total Greek to them. So I think just some very fundamental things would help Americans and anybody in any country learn how to manage their finances, adopt the correct attitudes, act their wage, if you will, and not get into those financial problems.
Right.
And you don't have to make a lot of money or spend it or have a lot of credit to have a high credit score. You just
Right.
have to manage it properly, you know?
Okay. Right. No, we've done some research. In our research, we found like in the past, credit scores were highly used to evaluate whether or not someone would employ you, because
Mhm.
it also was tied into even your zip code back then, where depending on where you lived, you they had those regions where finances were just not that great, and therefore credit scores were not that great, and so people were just locked into this cycle where if you were born in a certain place, a certain era, certain time, with a certain family, social, and economic background, there was
Mhm.
no way to dig yourself out of the hole or to improve, which is kind of what we've been researching with issues to credit scores being barriers to mobility within the financial system, right? And so then
Mhm.
you said that your firm doesn't require anyone to have a good credit score system when they come into you, have
Mhm.
a advising session with you. Are there other such companies, or do you think there should be more companies that shouldn't necessarily focus on the credit scores? And if you don't use credit scores, is there a different criteria that you kind of look for when evaluating clients?
Well, no. We don't care what their background is financially, really. I mean, they have to have assets for us to manage. That's what we do. Or we charge them for guidance as far as advice, which would obviously be some people that have very poor credit and need, you know, budgeting and need those tools that I was just referring to learn how to manage. And let me clarify one thing. Tetley Wealth Group, you know, as an advisory firm, we don't need a credit score to take you on as a client. But Raymond James, who is my broker dealer, I hire them to provide services to me. And because we deal with so much money for clients through Raymond James, they look at my credit score to hire me, or not hire me because I'm not an
Oh,
employee, but to bring me on as an advisor under their umbrella. So if I had bankruptcies or, you know, really poor scores, I could not work with Raymond James. And some of that makes sense. I mean, if you're handling a lot of finances, you don't want somebody who doesn't know how to handle their own or manage their own.
right. So in the financial sector, it's we do recognize that credit scores, when used for what they were intended for, like loan eligibility, whether or not someone can or will repay a loan, are
Mhm.
very useful. Um,
Mhm.
it's only an issue when like they have trouble creating that credit score, like the barriers to entry into the financial system when they don't have a credit score to evaluate, which that comes into
Mhm.
an issue. But so do you think it is kind of appropriate for employers to look at someone who is in an accounting position or a financial advisor position to look at their credit score and see if as a appropriate means to see if they can manage money?
I think that's one factor, then they have to look at their history too, as far as bankruptcies and that kind of thing, not just a credit score. So if I can kind of rabbit trail a little bit, that kind of leads into an even broader topic that I've been fascinated with for a few years now. And hopefully it doesn't happen here, but in China, they have what's called a social credit system. And
Yes.
are you familiar with that?
We have heard of it. We have research. We haven't gone too in depth into it, but yes, it's a very
Yeah.
interesting topic.
Yeah. So basically, China's gone one step further and said not just your credit score finances, but your behaviors. We're going to rank your behaviors and how well you pay your taxes. And, whether you go to a library or a bar, that counts either for you or against you. And they're tracking you with your phone, which I
Right.
don't agree with.
How by your fidelity to your family, how often you visit your grandparents could also be a factor. It's very
Yeah.
interesting.
Yeah, it's a whole social complex score, and that's really Big Brother kind of bearing down on you in your personal life. So I'm not sure how that would fly here, and it may be something that the credit scores here could lead to indirectly, and I think that would be a huge mistake, a huge problem, especially in the privacy area, because nobody likes Big Brother tracking them.
Right, right. No, definitely. But then how do you foresee it possibly inadvertently leading to this situation? Can you give a little bit more of a description on that?
Well, just like this discussion saying, well, credit scores are good when they're used properly, but it's not enough. We need to do more to get a bigger picture of what's going on in your life to justify you coming to work for us or managing that money or whatever you're evaluating or getting a loan. Um, so the banks and those institutions have huge lobbyists and a lot of power in government. And if they leaned that way and in that direction, they could start pushing for more and more things to be included in that credit score and get closer and closer towards some kind of social score like China's got. So I'm not,
Right.
yeah, so I'm not saying it's directly headed that way now. I just don't want it to. And I think the credit score is kind of the foundation of that whole process.
It does seem to be. We've also looked at situations where it's actually almost the opposite of what yours, where the credit score was used as a proxy to evaluate all those other factors that you mentioned. So where it's
Mm,
like now a proxy used for responsibility where they will not look at the history or they will not consider other factors. If you don't have a certain credit score, there's just absolutely is the cut and dry end factor into anything you're trying to accomplish. So do you
mhm.
instead of the credit score, or do you think there are other factors like you were saying the background, but are there any other factors could you foresee that instead of a credit score maybe could be evaluated like other it's very difficult to we like things to be kind of efficient and have something we could all share and look at quickly, but do you
Mhm.
think it would be better if people took a deeper, maybe more a slower approach to these kind of discussions or investigations into how people actually are as an individual rather than their social identity?
Well, perhaps to get into the social aspects, I mean, then you've got a million different
Right.
variations, and you're making judgments based on personal beliefs, perhaps. So it's kind of hard to, um, I don't know, put that into some kind of a structure. But maybe even taking the credit score apart and kind of going deeper into what they do. I mean, 35% of your credit score is based on payment history. So why don't I show you my payment history and let you decide well, that looks good. Oh yeah, he was late a few times, or he missed a payment, or he's out of the country or whatever. And that you could ask me questions, what happened here? Like during the pandemic, a lot of people got way behind and had to get forbearance on their loans. And, I don't know if that's affected their credit scores or not. I haven't really delved into that, but you could become the credit agency yourself and just get a broader view of somebody's financial lives instead of just a number,
Right,
and
right. The
and right
boiled,
now, yeah. And right now, the younger you are, the lower the average score you're going to have. I was looking at the averages for people in their 20s and 30s, and it slowly builds up, until your 60s, and you've already got great credit, but you don't need it anymore. That's kind of the whole basis, right? When you don't need credit, you can get all you want, right?
that, right, because past history that can be reviewed, or like there's enough information for the credit score system to just boil down to a better number, right? Can you
Mhm.
explain how payment history is like 50% of the credit score? Was that it, or is it?
I think it's 35, something like that. Yeah,
Can
if
you
you just,
like you also
well,
mentioned bankruptcies before? Are
mhm.
there others you can list off that are play?
um, sorry, phone keeps
No,
ringing. I don't know if you can hear it. Um, well, if you go online and look at like FICO, myfico.com or whatever, they'll break down how they rank different items, payment history, number of accounts you have opened, what percentage of your entire available credit are you using, what percentage of that. Um, those are three of the biggest things that they look at, and they tell you how much of each one is part of your overall credit score. And I just remember that payment history is number one. So if you're late or you miss payments, that's going to hurt.
right, no, definitely. Then a while ago we were talking about how your credit score is used by those you contract with as a means of hiring you as an advisor. Is there
Mhm.
any like when you set up your business, the Tetley Wealth Group, was there any I don't know, what did your credit score play into that as well, and how you were able to establish that from the government or anything?
No, it was strictly between Raymond James and myself, but it would have been true if I'd gone to work for LPL or Schwab or Fidelity, any of those brokerages that hire independent advisors or bring them under their services. They would look at that because of the amount of money that we're moving in and out of their
Mhm.
accounts. Yeah, but it didn't have any effect as far as stopping me from going independent. You
Mhm.
know, if I'd had a terrible score or bankruptcies, I may not have been able to go independent because nobody would have worked with me. You
Right,
know, yeah.
right.
So even FINRA and the agencies that overlook the securities industry, even if I was an employee with Morgan Stanley or Merrill Lynch or whoever, which I used to be with Morgan Stanley, if you file bankruptcy, you have to report that, and so they'll check your credit score from time to time, and they just want to make sure you're not getting into trouble, personally, and that would tempt you to, embezzle money or steal money from clients. That's what they're trying to do, is basically protect themselves and their clients.
Right, that makes sense. Then
Yeah.
we're also considering do you have any, we kind of led this a little bit and you had some suggestions earlier. Are there any other suggestions that you can think of to the credit score system themselves? Do you think would make a difference?
I really haven't thought about it that much as far as what could we use to replace it.
Mhm.
It's been around so long, I'm not sure we can ever get rid of it.
Right.
Hopefully something better will come along, and maybe technology will help be innovative enough to come up with an answer. I don't have that answer, but I
Right.
think education at a young age is the key to keeping people out of trouble financially, or at least so they understand what's going on and why they have a good or bad credit score and why it's important. Just like you're getting that word out to the world, it's
Yeah.
important that people understand how that happens. you know?
Yeah, absolutely. Even in high school, I remember for one semester, I had to take a 21st century literacy class.
Mhm.
And part of that was we had like a week module on what a credit card was. And that
Mhm.
was about all that I remember about it, was that it was about what a credit card is and what
Yeah,
bank.
yeah.
Then any finance we took or budgeting classes were electives that you could choose to take. So it would be,
Mhm.
I agree, it would be kind of helpful to have a dedicated built-in requirement.
Yeah.
And,
And
and
in
then
fact, well, let me just elaborate a little bit on that. One of
absolutely,
the largest problems that we have in this country financially is for student loans. So
yes.
we're talking about you and everybody else on the planet. If you're going to college and you want to go get a loan, it's very easy to do whether you have good credit or not. I don't think they look at credit scores. I'm not sure, but we have $1.5 trillion of student loans in this country today. Okay, if you look at all the credit card debt, MasterCard and Visas and Discover and everybody else, you add all of that up, it's only $1 trillion. There's 50% more student loan debt in this country than credit card debt. So
Mhm.
you're burdening all the young people trying to get a better education, trying to get ahead in the world with all of this debt. And guess what? If they do go under and file bankruptcy, you can't get rid of credit or student loans in bankruptcy. That's the one debt you cannot eliminate. Did you know that?
I did not. Do you think it's
Yeah.
because I don't think they consider credit card I know they take into account our parents' contribution to our education or how they would be
Mhm.
able to us co-sign for loans, but they don't, I believe, look at um our own personal credit scores. I, for one, did not have a credit score when I first um started at the university, and thus whenever I took out loans, I there was nothing for them to consider at that point. But
Mhm.
then at the same time, I've been told that repaying a student loan can also help build your credit.
Mhm.
Is But then again, in the past, when our country was younger, the government used to subsidize a lot more of the university's expenses and tuition pays. Do you think
Mhm.
when that changed, a lot more of the burden, again, this is one of the things I saw in that class, went on to the individual themselves? Do you think it would be better if our country tried to maybe go back to that a little bit more or even it out a little bit?
Yeah, I think so. I'm not sure how that would look,
Right.
for the government and the individual. Pardon?
I said, yep, there's so many other factors. It's the hard part.
Yeah, but I think it's a broken system. Um, I'm on the board for a small Christian college nearby, and they don't allow student loans. They're very cheap though. They're so, you know, I don't know, down to the bone as far as you want a 4-year degree, you can get it in 3 years because we don't have summers to take off. It's 3 full years of classes, and you come out with a 4-year business degree, and they don't allow any student loans. They're not eligible. They're eligible for grants. They're accredited and all that. And I think it's a new type of model for higher education that I wish would spread more, so that you could focus on the education you want and just pay for what you need and not pay such high amounts and have to get student loans for those larger amounts. You get a broad education, but you're not using half of that when you leave,
Mhm.
so, and I'm not talking about a trade school either. I mean, the business degree is pretty broad, but they don't have a sports program to support,
Right.
which
It's purely focused on a specific type of
degree,
degree.
degree. Yeah. Yeah. So their costs are low, and they don't have to charge as much. You can do the whole thing for less than $20,000 for the entire 3-year program.
Right.
So they have kids going to work at Starbucks at night and paying their own way for 3 years to get a degree without any student loans, or they can get some grants if they qualify, which is free money. They don't have to pay it back. So, those kinds of things I think will help build a new generation of kids without all the debt. and they won't have such a need for, the credit scores being high all the time. Yeah, I think it's right now, it's really a difficult system, to
Right.
grow up in.
Okay, well, thank you so
But
much. It's been
yeah.
very interesting.
Yeah, well, I hope you guys come up with a new system, a new credit system where you don't need credit scores, and let me know when you when you come up with that.
Okay, I'll let you know. It may be much later in my lifetime, but we'll look into it.
Okay.
Thank you
All
so
right.
much.
You're sure welcome.